Hi winners! Look, welcome to Terry's Tips, guys. Get a notebook, get a pen, because today we're going to talk about how you can get up to $100,000, y'all, with only a 600 credit score. And guys, it's a soft pull, like a for real soft pull, even when you get the money, okay, guys? So specifically, I'm going to talk about a lender called On Deck. They are a fintech company. In this video, I'm going to explain why they are a good option. I'm going to tell you about their restricted industry, guys, and then what you need to qualify. And I'm also going to deep dive real quick into what a fintech company is. And guys, some of you are going to qualify for this right now. And some of you guys, after hearing everything in the video, you may need to do a couple of things, but then you'll qualify soon. So whether you're ready right now for a business line of credit for up to $100,000, or that's one of your goals, you need to watch this video. And for my newbies, welcome. Guys, my name is Terry, and I upload brand new videos every Tuesday and Thursday. And this channel is about wealth building, legacy, leveraging your personal and business credit for the big money. Okay, guys? And I'll do my nugget at the end. And real quick, today is June 16th when I'm doing this video. And I want to give a shout out to my Elite 10 cohort number 10, who is starting this evening. Guys, I can't wait to see you guys in a couple of hours. And cohort 11 is starting July 11th. All right, guys, so On Deck, they are a business. You can get a business line of credit, guys, or a business term loan from them. The business line of credit is from $6,000 is the minimum up to $100,000. Guys, I'm about to stop dropping nuggets through the entire video, okay? So the business line of credit, which is unsecured revolving credit, okay? $6,000 is the minimum, up to $100,000, guys, is the maximum for the line of credit. However, they also have a term loan, guys. The term loan is, I wrote down, $5,000 is the minimum, and it goes up to $250,000, guys. And both of them are soft inquiries. Yes, y'all. Both of them have a minimum requirement credit score, personal credit score of a 600. They will do a soft pull of your credit reports, guys, but you only need to be a 600, okay? And it will not ever be a hard pull. Now, guys, revolving credit. So I want to talk specifically about the line of credit, guys. And one reason is because it gives you the most flexibility, guys. So for revolving credit, write this down. You're going to have three options. You're either going to have a business credit card, a business charge card, or a business line of credit. You need to know the difference so you know what you're applying for and how to use it. So a business credit card, is going to have a higher interest rate. You're going to use it for short-term purchases. And also, guys, if you use it and charge it, but you pay it before the statement date, then you'll avoid paying any interest, right? So it has its benefits. However, if you're trying to do something like you need a big amount, you need money off of the credit card, doing a cash advance is really kind of the best way to liquidate them. And there's going to be a fee for that. Now, a business charge card, which is also revolving, guys. Well, you're learning, teaching video, okay, guys? The charge card, guys, is like your American Expresses. It's like your Brexes and your Ramps, where it's also revolving credit. These are all revolving credit, guys. But the full amount is due in 30 days. So, for example, for American Express, if you charge $10,000, then that $10,000 is due in 30 days. Now, guys, it still has a place in, your financial kind of a toolbox, okay? Because you know which ones are revolving where you can carry a balance and which ones are due in 30 days. And high-level strategy, which is what I teach on this channel, is having that revolving charge card on your credit reports, guys, can help you qualify for the bigger lines of credit, for the business term loans, for other items. You guys just know that thing is due in 30 days. So don't charge it crazy if you don't have the means to pay it back. Guys, I use my business charge cards. I have one I use the most is with Divvy, and I use it for travel and for events. Because when I use it, usually if I'm doing an event, then they're going to pay me right away, and I can put it right back on the card. There's a lot of rewards points. So there is still ways you can use it. Just be smart about it, guys. And then, guys, the most flexibility is what I'm talking about today. A business line of credit. So let's say you get approved for $50,000, guys. That money is available to you, and you can draw how much you need. So if you need $5,000, if you need $10,000, if you need $20,000, you need $30,000. While you just had the money approved, you're not paying any interest, right? That's one of the benefits. However, as soon as you draw the money, then you're going to start to pay you're going to start to pay interest on, and there'll be a repayment term. But it's a way to get the big money. So if you get approved for $100,000, You can use 30, 20, 50, 80, 100,000. And then it resets itself, right? So once you pay it back, then that money is available again. So all three, guys, know this, 3 types of revolving credit: charge cards, credit cards, business line of credit, with the business line of credit being the most flexibility, okay? Now, On Deck is a fintech company or alternative lender, okay? Guys, another nugget right here. You're really only going to get business credit from 3 types of lenders. It's either going to be a fintech company, alternative lender, which is what we're talking about today, On Deck, or like a commercial lender, a traditional bank. Not even throw the credit unions in there. So that's like, a Citizens, a PNC, a Truist, a Wells Fargo, a Bank of America, Navy Federal Credit Union, all of those things. Those are traditional banks. Or the SBA, guys, right? So that's the other place. So it's either going to be a fintech company, a commercial lender, or SBA. Guys, they all have pros and cons. I probably need to do a separate video on this altogether, but real quick, high level, the reason why on this channel, y'all, I talk about fintech companies a lot is because they specialize in funding small business owners, entrepreneurs, investors. So it's a lot easier for you to qualify. That's why you see people getting great big money and bigger results, because I tell you how to look fundable and credible, how to work on your scores, but I also connect you to the right type of lenders for your needs and for your goals. So guys, but there's a trade-off, right? Because fintech companies and alternative lenders, the pros: low documentation, specialize in small business funding, can fund you super fast, sometimes like in a day, 24 hours, even with On Deck. But they have the con is they have high interest rates, right? And it's higher risk for them because they're approving people that the banks and SBA would normally deny. This is why, hello, my elite 10 people in Credit Leverage Lifestyle, I teach you guys to use your credit for income producing assets and leverage. And we talk about strategy. What are you going to use the money for to get a return so you can pay it back, and you're actually leveraging and building wealth, not just getting into debt. Come on, somebody. I feel good today. So I done walked and had my vitamins, drinking my water, like I'm about to be on in this video, okay? And so for commercial banks, guys, so they're right in the middle where, it takes a little bit, way longer to fund than the fintech company. So it can take weeks to get the funding, right? They're going to want more documentation. So they'll want bank statements, they'll want credit scores. A lot of times they'll also want your taxes, right? So they're going to want way more documentation, but they are going to have a lower interest rate, right? So you have to see where the pros and cons, because maybe it's a lower interest rate, but you don't qualify. So you need to go with the fintech company, which is higher interest, but make sure you're using it for a smart use. Now, SBA, all the way over here, guys, they're like the extreme where they're going to want a ton of documentation. They might even want, in addition to taxes and bank statements and your EIN and your credit, they're also going to want sometimes a business plan or resumes for the business owners. However, and the other thing for SBA, guys, they take a long time to fund. So sometimes it can even take months. However, it's always going to be the lowest interest rate. Is always going to be the lowest interest rate. So just know there are pros and cons, but the 3 lenders, the 3 types of lenders, guys, are fintech companies, commercial banks and lenders and credit unions, or the SBA. They all have pros and cons. Now, one thing I will say about On Deck, which is who we're talking about today, guys, they are not brand new. They've been around since 2006, which is why I'm talking about them. They've funded over like $13 billion in businesses, in business funding, guys. And one reason why I like them is they actually report to the business credit bureaus. Come on, somebody, they'll help you actually build business credit. A lot of the fintech companies, guys, will give you money, but they don't report to the business bureaus, which is a pro and a con, because I got some that don't report anywhere. And that's just like money sitting in the tuck that I can use for investing and growing my business and hiring and marketing, all those things, right? So a pro is it's a soft inquiry. A pro is that you only need a 600 credit score. A pro is that they actually report to Equifax and Experian. I don't have any data right now showing they report to Dun & Bradstreet. But always remember, guys, I'm doing this video June 16, 2022. Things can change. So as of today, I can confirm they report to Experian Business and Equifax Business, which is a pro for you guys, because as you pay it back, it will help you build business credit. Come on, somebody, and qualify for some other items. Now, guys, one thing I want to stress to you is the restricted industries. Guys, they fund over 700 industries. Why? Because they are a fintech company and they specialize specialize in small business financing. However, there are some restricted industries. So as of this video, like some examples of those restricted industries are like adult entertainment, firearms, horoscopes and fortune telling, lottery, gambling, casino. So guys, I will go back in. I'll put the link for On Deck in my description. I'll put the link for their for their restricted industries also, so you guys can check. And then also another reason why I like them, two more reasons why I really like them besides the fast funding and the fact they have a low credit score requirement and a soft inquiry, is because when you apply, it takes real easy. You guys can do the application online or over the phone, a couple of minutes. They actually give you a credit advisor. So the credit advisor will give you a call, talk to you about your needs, and then help you with funding, right? And they do have, like I said, the line of credit and the term loan, but I'm talking specifically about the line of credit because it's the most flexibility, guys. So I like the fact that you're not just flying blindly. Like, you apply, someone will you can actually speak to somebody on the phone to get your questions answered, and that's as a soft inquiry, okay, guys? Another reason why I like them is they have something called, I wrote down, the Smart Box Comparison Tool. Smart Box Comparison Tool. Okay, guys, so I'll put the link in the description also. So one thing that On Deck prides themselves on is transparency and lending. So they create like this tool where you can plug in information and kind of compare the products and the pros and cons and the amounts. So I like that, right? So always when they actually get down to you specifically, those things can change, but they do kind of put that out there as a tool so you can kind of see what is the best option for you. Now, nugget here, guys, the line of credit. Fintech companies are always going to be short-term lending. That means a line of credit, you have 12 months to pay that balance back. And for the term loan, guys, you're going to have 24 months. So you do the math. Don't be out here getting $100,000 and it's due back in 12 months and you're only making $2,000 a month in income, guys, because now you've gotten yourself into some trouble. So be aware that it's money you can get quickly, and then you're using that for what? A down payment on a property, for, expansion, for maybe more equipment that's going to help you level up, maybe a marketing team. Guys, put it into something that's going to give you some passive income, some residual income, help you grow your business and your brand. Now, some of the other kind of requirements for On Deck, guys, is like I said, they want a 600 credit score. They will do a soft pull. They do want you to be 1 year in business. So guys, that's not that long. So either you have a year of incorporation already, or maybe you're 6 months in. Okay, work on everything else. I have a business credit building playlist for free. Go through the business credit building playlist and get your other trade lines, do your fundability, do your credibility. That way, when you hit that 12-month mark, you're good to go. Some of you guys have multiple businesses. Come on, somebody's multiple entities. So if you have one that has been open, been incorporated for 12 months, and another one's only been incorporated for 3 months, come on, what do? Then you go ahead, you use the one that meets the requirements. So I do want you to be 12 months in business. And then another thing, guys, is they're looking for about 8,000 to 9,000 in revenue. So that's going to like vary some, but just know they're going to want some revenue. Why? Because it's revolving credit and it's unsecured. Now, real quick nugget right here. It's always a soft inquiry, guys. However, if your credit file is restricted, guys, I be telling you all the time. I tell you guys all the time about these fraud alerts, about these freezes. Guys, if they can't get access to your credit report, then they cannot approve you. Then a lot of times you'll have to go ahead and remove the freeze or remove the fraud alert. And then if they do a pull that time, it may be a hard pull. I tell you guys all the time about some of the stuff that y'all are doing. So I'll do some more videos about that, but just know they need to get access to your credit report to be able to approve you. And a lot of times they can approve you in like a day. You can get funding in like a day. Now, always remember, another nugget, guys, is that the underwriter can always request more documentation, right? Now, something's not quite right, or they have questions, like they're allowed to do. They're about to give you $20,000, $30,000, $50,000 in unsecured credit. They're allowed to ask questions. But in general, the fintech companies are always less documentation, higher amounts that they'll give you. They'll fund you very, very quickly. And they just do have high APRs, but that's why you're using it for a smart use, okay? Got it, good guys. And I hope that was helpful. So I'll put the link in the description for On Deck. Do your own research, but they're a great option. And they will say yes when other lenders say no. And guys, for my nugget, I want to talk to you about vision. Guys, don't just be out here getting personal credit, getting business credit, trying to be an entrepreneur, trying to get passive income, and you have no idea what you're doing or why. Did you hear me? Like, you need to have a vision for your business, for your relationships, for your health, for your love life, for your spirituality, for everything, guys. Like, if you don't have the vision, then how are you going to know you're moving in the right direction? How are you going to put together a plan? How are you going to benchmark? How are you even going to identify, come on, somebody, that you've gotten there if you have no idea what there looks like, guys? And so high level, I just might lead 10 people, but kind of ask yourself, how much business credit do you need? What are you going to use it for? What kind of funding do you need? What's the best case and worst case scenario? Guys, map this out for every area of your life, because I promise you, you cannot reach your goals if you have no idea what they look like. So it starts with having the vision for everything in your life. Then you make a plan and you work the plan. Got it, good, guys. I hope that was helpful. Have a super amazing day on purpose.